Imagine this. One man sitting in the Oval Office with the power to sign or refuse to sign a single piece of paper. That choice alone could freeze paychecks for millions, stop Social Security checks, shut down government programs, and even rattle the entire global financial system. We often think of wars, natural disasters, or pandemics as the great threats to an economy. But what if the most dangerous weapon wasn't outside America, but inside its own government? What if a president, through stubbornness, recklessness, or even intent, could push the world's largest economy to the brink of collapse? History has shown us just how fragile trust can be. A delayed payment here, a political standoff there, and suddenly markets tumble. Borrowing costs explode, and everyday families pay the price. So here's the question we'll explore today. Does a president really have the power to crash an economy? And if so, how close have we already come?
The 2020 U.S. presidential election was called for Joe Biden, ending Donald Trump's single term. It was a rare defeat for an incumbent, happening in the middle of a pandemic and global uncertainty. But instead of conceding, the outgoing president challenged the results. That refusal raised doubts about the peaceful transfer of power, a cornerstone of democracy. Transitions matter. They are not ceremonial, they are operational. They decide who manages budgets, appointments, and policies. If the handover is messy, the economy trembles. Investors lose faith, businesses hesitate, and ordinary people hold back. Think of the economy like glass, strong from a distance but easy to crack when struck in the right place. So the haunting question arises, how much damage could one president actually inflict? Could one person, through delay, denial, or reckless action, shake not just America but the world economy? The presidency has limits. Checks and balances exist. But confidence is fragile, and confidence is everything in modern markets. Even the appearance of chaos can start a chain reaction.
A president doesn't control the economy alone, but their influence is massive. First, through words. Markets move on statements. A tweet, a speech, even a rumor can boost stocks or send them crashing. Investors follow signals, and uncertainty is poison. Second, through policy. Tax cuts, tariffs, spending programs all shape short-term outcomes. Lower taxes may boost business confidence, but increase debt. Trade wars may protect one industry while raising costs for another. Third, through budgets. Congress writes them, but presidents guide priorities. Cut infrastructure or education, and the economy suffers in the long run. Perhaps the most dangerous tool is neglect. Ignoring crises, delaying aid, or refusing to plan can turn small problems into national disasters. The presidency is both shield and sword. Used wisely, it strengthens the nation. Used carelessly, it leaves lasting scars.
Debt is America's lifeline and its greatest vulnerability. The government borrows constantly, with a limit called the debt ceiling. Normally, Congress raises it, and life goes on. But if a president refused to approve it, the government would run out of cash. That means no paychecks for federal workers, no Social Security checks, no payments on existing debt. The ripple would shake the entire global economy. U.S. Treasury bonds are the world's safe haven. If America defaulted, even once, trust would collapse. Borrowing costs would surge. Mortgages, loans, credit, all more expensive overnight. We've seen warnings before. In 2011, just the threat of default lowered America's credit rating for the first time in history. Debt
is a president's sharpest knife. Used well, it fuels growth. Misused or weaponized, it could set off financial chaos around the world. Every economy stands on three pillars: currency, industry, and people. Destroy the currency by printing recklessly or piling debt, and confidence vanishes. Inflation eats savings. The dollar weakens. Destroy industry by neglecting infrastructure or disrupting trade, and factories close, supply chains fracture, and jobs disappear. Destroy people by underfunding education, cutting health care, and blocking skilled immigration, and the workforce erodes. Innovation slows, talent leaves, and growth stalls. History shows this path clearly. Argentina, Venezuela, nations that collapsed when these pillars crumbled. A president doesn't need bombs to ruin an economy, just bad choices repeated over time. Chip away at all three pillars, and even the strongest system begins to fall. The American economy is powerful, but not invincible. Yes, there are guardrails. Congress controls spending. Courts block unlawful actions. The Federal Reserve stabilizes money. These are safety nets designed to withstand chaos. But guardrails don't prevent every crash. They only soften the impact. If tested repeatedly, even strong institutions bend. And once trust erodes, rebuilding it takes years. Still, America has survived depressions, wars, and recessions before. Its diversity, innovation, and global role give it resilience. The real lesson? Leadership matters. Policy matters. And so does vigilance. A president may not collapse the economy overnight, but carelessness or intent can slowly weaken it. In the end, the economy isn't numbers on a screen. It's people's lives, livelihoods, and futures. Protect trust, and growth continues. Destroy it, and collapse follows.